Well, g'day there, traders and friends, market participants, and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this Wednesday afternoon market recap. Today's date is the 29th of March 2017. We have two more trading sessions until we round out both the week and the monthly chart across the board for the US financial markets. It has been rather an interesting development in terms of price action. We have been anticipating the slowdown which has taken place for, again, the majority of March 2017. And since this slight pullback, dating back a week ago, we have been expecting, again, this inevitable bounce and rally back up to retest these resistance levels across the board. Now, if you pay attention to the NASDAQ at the moment, we are coming back and we are very close to that 5,900 area. It has acted as very strong resistance on two occasions previously. Here we are at the current juncture, retesting it for the third time. Now, the NASDAQ is leading the other two widely followed equity markets. If you pay attention to the Dow Jones Industrial Average, you can see that in percentage terms, it has quite a lot further to move until, of course, we come back up and either, or first of all, retest the mid-March 2017 swing high, or of course the all-time high on the Dow Jones Industrial Average, which was priced in on the first trading session of March. So if we start looking at the monthly composition of these candlesticks, you can see the Dow Jones Industrial Average is still down 152 points on the monthly chart. It is a little bit interesting because we are seeing again a little bit of confusion amongst the markets. The NASDAQ is printing into positive territory. So although the Dow is down on the monthly chart, the NASDAQ is still positive. What is interesting about this is that although we are up 72 points, we are developing what we call a high wave spinning top, again reflecting considered indecision across the board in the financial markets. We don't have that of a high wave spinning top. It is more or less just a generic spinning top here on the Dow Jones Industrial Average, but it is rather telling when we start looking at these monthly charts. We are also down, or at least negative, month to date, down 2.5 points in the S&P 500. When we start looking at the candlesticks more so on the weekly chart, this is where it becomes increasingly more interesting. You can see that we have doji candlesticks, high wave spinning tops, followed by additional dojis. We've got these sort of non-eventful bullish candles, followed by engulfing candlesticks, followed by, as at the composition of the construction of this week's chart, it looks as though we're going to potentially print an outside day engulfing candlestick, which again is very bullish. What we need to pay attention to is, of course, the volume. Now, we still have two more trading sessions, obviously, to factor into this weekly bar, but it's something that I'm paying very close attention to really to help me understand whether or not we are going to see a legitimate breakout above these resistance areas. Now, I haven't shied away from the fact of really what I believe is going to happen. To me, this market looks as though it is putting in some form of an intermediate top at this particular point. The reason for that, as I have disclosed in numerous videos, prior to this one, is that we do have all of the signals that this intermediate trend is exhausting itself. And really it sets up again from this tweezer top across the board on the Dow. You can see it here on the S&P 500 and again on the NASDAQ. Combined with, of course, this gap, the gap which didn't continue in fact, or instead it did fill, and since then we have pushed on down below it. It's looking as though we are trying to establish some intermediate exhaustion. Now on the daily time frame, this is where it gets a little bit interesting. Really, I guess the outlook and the analysis which has led me to believe that we are going to see this short-term bounce is the simple fact that on the daily chart we are relatively oversold, and generally what happens is when we come down and at least hit that rising 50 exponential moving average, it will act as a short-term trampoline. It will act as obviously rising support, and we will see again traders or active market participants jump back in like a magnet. They'll hone in, laser focus around this 50 exponential moving average, and they will look at it as a buying opportunity under the assumption, of course, that this trend is going to continue. Well, if we start looking at, again, some of these weekly oscillators, just to show you just how overbought and how overextended we currently are, and as we find ourselves rallying back up into resistance, we are getting sell signals across the board. You can see this on the weekly chart of the Dow Jones Industrial Average. All three oscillators are beginning to cross. If you look at the S&P 500 again, we are starting to see all of these sell signals develop as well. However, this isn't the right time to be shorting the market. We have no confirmation whatsoever, nor is it the right opportunity or the right time, so to speak, to actually be buying this market. You should be currently, as best as you can, be non-directionally biased and to really remain quite neutral at this particular point. Until the markets collectively break out above their resistance levels, well then that will be the bullish confirmation to really start opening up, or at least allocating capital to take advantage again of this market moving higher. That can most certainly happen, and I'm not discounting that whatsoever. Having said that, these little swing lows in price, which we've established, especially during Monday's trading session before we got that intraday reversal, right around that 50 exponential moving average, well, this is going to be the structural swing low. So think of this as resistance up here, and of course, this short-term structural support down here. These are defining, of course, the tradable ranges, which we are looking at as market technicians until, of course, we start to see some, technical developments in terms of price action and structure begin to develop. Anything which happens and occurs within here, we can really just consider it market noise. And really what it's leading us to believe is that depending on which candlesticks show up, or again, I'm expecting some relatively large up days followed by, again, days following, which will more or less give back most of those gains until we pierce above or pierce below some of these triggers. I am relatively, not active at this particular point in the market. It really doesn't interest me at this particular point, and I want you to understand why that is. It takes some time for, I guess, material advancements, or at least basing patterns, or even topping patterns to really set up until the majority really figure out what is going on, and then collectively either push price higher or, start dumping stocks, so to speak. And at this particular point, we don't have any clear signals which of those two outcomes it is going to be. Now, if I cast your mind back to some of the videos which I recorded yesterday and over the past 1 to 2 weeks, I've been relatively bullish on the US dollar, given, of course, that we're coming back down into this green box. This is what I've been speaking about in terms of macro support. On top of that, it also aligns quite nicely with this, trend line extension from early 2016. We actually hit it. If I zoom in on the detail, you can see the construction of this weekly candlestick. You can see that we actually pierced ever so slightly below this green box. However, we're still holding above this primary trend line. So technically, this ticks the box of a bullish continuation. If we start looking at some of these daily oscillators, they're only just beginning to start shifting to the positive or into a positive alignment. So again, as a lot of people again read into the sentiment, or at least are driven by their emotions, you need to look at this logically, disconnect again from your emotional biases or tendencies, and again, just look at the chart and understand where those macro pivot points are, and then to sort of, in many ways, bidirectionally set up the trade when, of course, the structure is there. Now, what we're doing in the US dollar right now is that we're, effectively building structure. We don't have the structure yet. I assume we're going to come up, maybe up to about 10 or just above 100, just above that 100 handle. We might even pull back. We might see, again, a continuation of market noise, but inevitably, I assume that we are going to break to the upside. So again, this is a relatively tentative entry at this particular point. I am looking for, again, some structure to develop, but ultimately I am looking for something like this to happen in the US dollar. And continuing off from that video yesterday, we saw a little bit of a healthy advance today, up 25 cents in the US dollar index. It is starting to bounce. However, again, we're starting to see a little bit of an upper wick develop around this resistance area, which is what I've just previously highlighted to you. So think about the US dollar and, of course, what this means for gold and silver. I have taken a relatively bearish outlook on gold and silver at this particular point. We are at that swing high. We are up at this resistance level, this very important pivot point. And given, of course, my outlook on the US dollar, being, of course, that it is going to appreciate over the intermediate and even potentially macro time frame, at least up to about 112, well, that's going to naturally be a little bit of dead weight for commodities moving forward. So as the US dollar prices in or pivots at that macro pivot point, that very important macro support area, we've got gold and silver, which are coming back up into the general vicinity where we would expect a reversal to take place. And as you can see, really, we are starting to see the development of some bearish candlesticks. We're starting to see some interesting gaps, although these are 24-hour suspension gaps. When we start coupling it with, of course, some of these oscillators, which is really just a polar sort of opposite, picture to that of the US dollar, as the US dollar is relatively oversold and beginning to turn up. Well, commodities, or at least gold and silver, are relatively overbought and they're beginning to turn down. So think about that. Think about that intermarket relationship, because it is very important. Also, on top of that, we are reversing, or appear to be reversing, right at that sideways moving 200 moving average. At the moment, we're sort of in this sort of consolidation phase. We're above the 100 but below the 200. And again, this generally ushers in a little bit of volatility until we get the definitive break above the 200, or we take out the swing low, which is coming in right around that 100 simple moving average. The same is true for silver, which is interesting as well. You can see that we're sort of ping-ponging back and forth between the 100 and the 200. But having said that, we are still pricing in. I mean, if you go back and look at this, you can see the highs, the lower highs, the subsequent lower highs, and even towards the end of March 2017, in comparison, or at least comparing it against its earlier counterpart, swing high in the late stages of February, early March, we're still pricing in that next definitive lower high at this particular point. So It's very risky, in my own personal opinion, to be jumping into commodities, to be jumping into silver and gold at this particular point, because the probability of a reversal, whether it is short-term, intermediate, or the continuation of this larger macro bearish trend that we've been in since the peak in 2011 continuing is quite advanced and quite high, relatively speaking, to, or at least against, the continuation of what has been some form of a dead cat bounce, in my opinion. Nothing against gold and silver whatsoever. Again, it just fits into the intermarket analysis as we start breaking down the price of the US dollar. Now, what does this mean for individual companies? I mean, Tesla is something quite interesting because, and I mean, I'm bringing you to Tesla because it's something which I find quite interesting. We've been speaking about this. I mean, first of all, we've taken advantage of the bullish upward leg. I mean, beginning at 208, then 225. Personally, I stayed out at 250 or 249. But again, we got some really impressive, bullish trades out of this with those derivative contracts. We got out at 283 with the shooting star, and this was an old resistance area. Since earnings, which happened towards the end of February, we have seen again this very strong reversal gap. We've got this window which has only just been filled. We've got more or less an island reversal towards or throughout February 2017. What we have seen, we had a little entry here at 255. We had a really nice bidirectional trade set up. It moved up. It hit our first target at 264. It pulled back, but then as you can see, it's just jumped over our secondary target. You should be closing out of these Tesla trades. I mean, you should be more or less out of Tesla. Here it is at 277. The entry was 255. Consider this done. I mean, if you're in this, please close it out. In my personal opinion, you should be out of this trade. The reason for that is because I have a red box here, and you know that when I draw red boxes on my screen, just as I draw green boxes on my screen, you need to pay attention to them. What we have done is that we've jumped over this exhaustion gap, or what you want to call potentially an island reversal gap, and now we're starting to overshoot, or at least move back up into this resistance area. This is an open window which has been closed. Generally what we see is that when we get back up into this red box and start establishing divergence, or at least coming back up and retesting those swing highs, even at this particular juncture pricing in a secondary lower high, you'll start to see these oscillators confirm price action as it begins to roll. What we've done is we've priced in, or at least over the past two trading sessions, we've established two consecutive spinning tops. One on Tuesday was a high wave spinning top, and then again today we have a little inside day harami, or another spinning top here. So I mean, with Tesla, although we have been short-term bullish, you need to be, again, disconnecting yourself from the emotional state, or the emotional side, the natural state, that sort of can engulf you as a technical trader if you become attached to an individual stock. Disconnect, try and do that, and close the trade out for profit, and then think about potentially this rollover, because I do assume it is going to happen, unfortunately, for Tesla. This is the general location where we would expect it to roll. And again, coupled with some of this market analysis, it makes a lot of sense that a lot of these stocks, unfortunately, at this particular point, are going to be under a lot of pressure moving forward, at least for the short-term outlook. Although it can, and we can see, the markets take a little brief rally back up to, say, for instance, 2,400 on the S&P 500. That's about 40 points from where we're currently. The Dow Jones Industrial Average has the potential to run all the way up to 2,100, give or take. We're pretty much here at 2,650. So we have another 400 points or so until we start coming back up on the Dow Jones Industrial Average and retesting this pivot. I know that there are a few tech companies which are very close to triggering. Amazon last night did trigger, but Apple is one which is getting very, very close. You need to ask yourself a question, all right? And again, this is an autonomous sort of solution or answer that you need to come to alone. And really what you need to ask yourself at this particular point is, well, how much do you want these trades? I mean, at what cost, or what level of risk are you willing to start nibbling on some of these trades which appear to be breaking out? The reason I'm addressing this right now is the simple fact that the markets are not in agreement. You can see that the NASDAQ is the closest of the three markets to breaking out, but it hasn't definitively done so. We are not seeing Dow theory, develop, or at least confirm at the current juncture. The Dow Jones Industrial Average is a long way away from that resistance area. The S&P 500, a long way away from the resistance area. If I bring up the transportational average, you can see for yourself that it looks as though we're basing, or at least setting up some form of an intermediate reversal, coupled with, of course, a lot of divergences taking place across the board, not only on the daily chart, but also when we start looking at the weekly chart, we're getting some very important macro sell signals as well. So, I mean, the likelihood, okay, and just to put this in perspective for you to understand, or before I get there, let me just address the Russell. You can see very similarly that it looks as though we are pricing in three consecutive lower highs since, of course, the March all-time high on the Russell 2000. Now, again, getting back into the conversation, you have to ask yourself, well, am I willing to sort of jump into these trades, even though it makes sense technically just looking at this individual chart? Is it really confirmed by the markets? And at this particular point, if you've listened to me this far, whether or not you're looking at Apple, whether or not you're looking at Amazon, which is again triggered above 869, it's up about $5 from our entry at this particular point. I am very, very curious. I'm also very cautious on the likelihood of this continuation actually continuing, all right, or at least seeing this, the legitimacy and the sustainable continuation of price action above these recent highs until, of course, these markets confirm. So, my initial thoughts, my suspicions on market price, market action, and I guess my forecast moving forward. Obviously, it doesn't really sit all that well with a couple. Really, it is really only a handful of companies which are really confirming above these swing highs. So it is something for you to think about, something for you to propose really to yourself to consider, and then find peace in whatever decision that is which you choose to do. Again, personally, I look for market confirmation, and market confirmation is everything. I also look at, again, some of these trending signals. And again, when we start applying these, like the ADX, the Commodity Channel Index, to the Dow, you can see that this is quite lousy. It is turning down. So, it doesn't really like this bullish bounce at the moment. The CCI is quite weak. The S&P, you can see the same type of picture happening. The CCI is broken below that positive 100 reading on the CCI. And again, even the NASDAQ, as it rallies back up into this resistance area, the ADX is nosediving. So, this is really telling us a lot about, again, the momentum of this market. And it is very different to the breakout, which we saw in early, or I guess the impetus for the breakout being the Trump presidency, or the Trump president-elect, where the market went parabolic. And we started to see, of course, if we start applying some of these very important trend-following indicators to the breakout, you can see the difference as the ADX turns up and the CCI turns up. At the moment, we're rallying back up into resistance, yet the ADX and the CCI are flat. They're turning down. So again, that's a major warning signal, coupled with, again, those weekly divergences, daily divergences, and macro sell signals taking place, which I think you need to be obviously, shown and alluded to. So on that note, everybody, I will be signing off. This will be the end of the Wednesday afternoon market recap. If you'd like to learn more, have a look in the Pro Weekend Analysis class. I'd encourage you to get involved and to understand how we apply market analysis through to our top 12 individual trade lists, and of course the US dollar, gold, and silver. All the best, everyone. Enjoy your Wednesday evening. Enjoy your Thursday if you are watching this on Thursday. Happy trading, and I look forward to seeing you over the weekend. All the best, everyone. Goodbye.